Welcome back to another stock analysis, where I look at some key metrics to calculate the fair value and my buy price for the stock. Today I'm going to analyze Allianz, which is one of the biggest companies in the financial service sector and in Germany. Last, they generated a revenue of 149 billion euros and they have a market capitalization of 69 billion euros. The revenue of Allianz can be divided into three main segments, which are property and casualty with 42%, life health with 53%, and asset management with 6%. The company doesn't divide the overall revenue in different countries and regions, but only the two main segments. In the life health segment, the revenue comes to 40% from Western and Southern Europe and Asia Pacific, 39% comes from German-speaking countries, Central and Eastern Europe, 17% comes from the USA, 2% comes from Iberia and Latin America, and 1% comes from global insurance lines and Anglo markets, Middle East and Africa. In the property and casualty segment, the revenue comes to 36% from global insurance lines, Anglo markets, Middle East and Africa, 23% comes from German-speaking countries, Central and Eastern Europe, 17% comes from Iberia and Latin America and Allianz partners, 17% comes from Western and Southern Europe and Asia Pacific, and the last 7% comes from consolidation. If you want to know more about the revenue, you can check out the annual report of Allianz, which I have linked down below. Enough about the introduction. Let's find out if Allianz is a good stock to buy at its current value. The key matrix I use to calculate the fair value and buy price for Allianz is the dividend yield. I'll start with plotting the dividend yield for the last few years in a historical chart. I choose the dividend yield because the consistent dividend policy for me is the best indicator for a stable company. Additionally, a steady dividend payout helps to stabilize my portfolio and it makes it easier to rebalance my positions. To create some sort of signal line, I take the 5 years moving average of the dividend yield and plot it in the chart. The simple approach is now that the stock seems overvalued when it's under the moving average and undervalued when it's over it. The average of the last 5 years is 4.74%, and I would like to define this as the historical dividend yield. Since the historical yield is the fundament for my fair value and buy price calculation, this value shouldn't be too volatile. In an ideal case, the curve will give a straight line. I can measure how much the curve deviates from this ideal straight line by calculating the relative standard deviation, which for Allianz is 3.7%. To the historical yield, add a personal defined margin of safety of 25%. This margin of safety will be adjusted upwards or downwards depending on the matrix of the company. My first criteria is the stability of the dividend measured with the relative standard deviation. With this value, I can measure how volatile the dividend yield is. A high relative standard deviation would higher my risk to invest at a bad timing. As said earlier, the relative standard deviation for Allianz is 3.7%. This value is inside the green section of a rating scale, and therefore I subtract 5% from the margin of safety. As a dividend investor, the dividend growth of course is a very important matrix for me. In 2009, €3.50 were paid, and in 2022, €10.80 is expected. Allianz has increased the dividend for 0 consecutive years, but they have not decreased the dividend for 13 years. In the last 5 years, the average dividend growth was 7.3%. And this value is just inside the light green section of a rating scale. Therefore, I'll subtract 5% from the margin of safety for the dividend growth. By looking at the payout ratio, I'll find out if this dividend growth is sustainable for the company. I always look at the payout ratio in respect to the free cash flow, which is the cash flow the company has available after they've paid all necessary expenses. The free cash flow from Allianz has decreased from 29 billion euros in 2018 to 28.2 billion euros in 2021. The cash dividend were respectively 3.8 billion euros and 4.4 billion euros. The average payout ratio thereby becomes 13%. And this value is inside the green section of our rating scale, which gives minus 5% from the margin of safety. Before we continue the analysis, I would like to remind you that if you like my stock analysis, you can support the channel by liking the video and subscribe to my channel if you haven't already. If you would also like to support me financially, you can check out the links in the video description, where you can open up new portfolios or buy some great investor books. With that being said, you can of course also just continue to watch my videos, which is already a huge support. But now, let's get back to the analysis. Next, I'll take a look at the debt situation. The company has a debt of 13 billion euros and have 20.8 billion euros in cash. Then the cash gets subtracted from the debt, and this value then gets divided by the EBITDA, the debt to equity ratio is found. The EBITDA is currently at 17.9 billion euros. Since the company has more available cash than debt, the debt to equity ratio becomes zero automatically. This matrix tells us that the company could pay off the whole debt at any time if they wanted to. This matrix is inside the green section of our rating scale, and therefore I'll once again subtract 5% from the margin of safety. For the business to be sustainable, growth is a very important factor. The revenue has increased from 126.1 billion euros in 2017 to 148.5 billion euros in 2021. This gives an average growth of 4.2%. In the same period of time, the EBIT increased from 11.1 billion euros to 13.4 billion euros, which gives an average growth of 4.8%. The margin is found by dividing the EBIT with the revenue, which in 2017 gives 8.8% and in 2021 increased to 9%. Since the EBIT increases at a higher rate than the revenue, it only makes sense that the profitability of the company increases. In this case, it increases with 0.6% in average. An EBIT growth of 4.8% is inside the yellow section of the rating scale, which gives no further adjustment. For an average margin growth of 0.6%, the margin of safety also doesn't change. The last thing I'm looking at is the potential yield on cost. This matrix tells how great the potential investment in Allianz would be and what annual income I could expect in a few years. Allianz has a dividend yield of 6.43% and a dividend growth rate of 7.3%. I assume that the dividend gets fully reinvested at the same conditions. But I'll subtract 26% from every dividend payment because there are 26% withholding taxes for stocks from Germany. After 5 years, the yield on cost would be 12.2%, after 10 years it would be 25.9%, and after 15 years it would be 64.5%. I only calculate the potential yield on cost for the coming 15 years because of the natural uncertainty of this matrix. A yield on cost of 64.5% after 15 years is a very good value, and in the dark green section of our rating scale, and therefore I subtract 10% from the margin of safety. Since every matrix from my analysis has now been collected, it is time to adjust the margin of safety. Minus 5% for the relative standard deviation, minus 5% for the dividend growth, minus 5% for the payout ratio, minus 5% for the debt, and minus 10% for the potential yield on cost. The new margin of safety thereby becomes minus 5%. This leads to a desired dividend yield of 4.5%. And by a current dividend of 10 euros and 80 cents, I should therefore don't pay more than 240 euros for the stock. By ignoring the margin of safety, the fair price of the stock is determined, which for Allianz is 228 euros. These values can also be shown graphically in the chart for the historical dividend yield. This is done by adding the margin of safety to the historical yield curve. This then gives a new curve which always lies 5% under the historical yield. As seen in the graph, the yield curve is over the historical yield and the margin of safety curve. Therefore, I consider the stock as undervalued. Finally, I consider the stock at its fair value. When the price is 228 euros, I would buy the stock at 240 euros, and the stock price is currently at 167 euros. That's it for today's video, and thank you for watching.